Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hey audience and listeners, this is James Kandasamy from Achieve Wealth through value-add real estate investing. Today I have Cody Payne and Michael Tran from Colliers International out of Dallas market. Hey guys, why not you say hi to our audience and why not you introduce what you guys do?
Yeah, hey everybody, Michael here. We focus mainly on multi-tenant mid-rise office buildings or industrial buildings or industrial parks. Anything between 3 to 25 mil is our typical range that we work on.
And I'm Cody Payne, and I work with Michael, and that's pretty much he summed it up pretty well. We sell investment, office, and industrial buildings in Dallas-Fort Worth.
Got it. So you guys are brokers. Do you own any of these as well?
Actually, we do. We actually just did a syndication not long ago where we pulled together a few investors' money and bought a portfolio of 5 office buildings out in the mid-cities, and we've even done some development also.
Got it. So office and industrial, nobody have talked about this asset class in this show. So I want to go really deep into how people make money out of this asset class, because I'm a multifamily guy. I'm so used to multifamily, and a lot of people knows multifamily very well. It's like seems to be like the only asset class out there, right? But I'm sure there's a lot of people out there who's killing it in industrial and office. So I want to go deep into how an active investor would look at these two asset class, and you guys absolutely will be giving a lot of value in this discussion. So let's start with industrial. Can we define what is an industrial asset class? How does it look like? When I drive by, how can I say this is industrial? And is there any different types of industrial that I need to be aware of when I drive by when I look at something?
Yeah, absolutely. So industrial is going to be, your big box, tall, concrete warehouses that you'll see as you're driving along the freeway or, in some other parts. These things can range anywhere from, tenants utilizing just a couple thousand square feet up to a large shipping receiving warehouse that you'll see, that can be 500,000, million square feet. A lot of things that I think a lot of people are familiar with is, seeing those tall 24, 36 foot tall concrete structures where a lot of 18-wheelers are backed up to that are, loading, unloading, cross-docking and things of that nature. That's what your typical image of a warehouse industrial is. And a lot of people look for that. And that's one of the key asset classes that a lot of investors are looking for right now.
Well, so you said a lot of investors. It's a very relative term. I'm not sure you guys know how much you invest in multifamily. So is that same equivalent people are investing in industrial and office? Or is it like, from your knowledge, multifamily is like crazily too many people and industrial is like a niche buyer pool?
The office and industrial, it is a little more niche. I wouldn't say there's as many buyers for it as there is for multifamily. Obviously there's a lot more multifamily than there are, mid-rise office buildings, especially out here in Dallas-Fort Worth and even in Texas as a whole. But it's very niche specific. And so, that's why a lot of times you'll see a multifamily guy, refer out if someone's looking at buying an office building or, even vice versa, because we won't sell a multifamily complex just because we're not as aware of it. But the buyer pool is still very good. We get a lot of multifamily people, especially over the past 3, 4, 5 years, that have really started to hone in on the office industrial market as compared to my 10 years prior to that.
Got it. Yeah. Even in my book, I mentioned that all these asset classes, they are somebody who's really good at these asset classes, and a lot of passive investors just look to seek to this kind of operators who are really good at industrial, office, or multifamily work. They are people who specialize in this, and they're really, really good at it. So they have to seek for that operators, right? So that's good to know. It's very niche market, right? So coming back to industrial, how do I identify a sub-market? How do I find an industrial which is really good in terms of location? How do I say, when I look at this building, I can say that this building is in a really good industrial location? How do I say that? What are the factors I need to look at?
One of the main ones nowadays is access. a lot of the logistics chains, they're trying to make sure they can get the 18-wheelers in there parked. That's why a lot of the users that are looking out that way, they're always making sure that they're centralized too. So like, let's say the Great Southwest District here, just south of DFW Airport. That's one of the biggest industrial hubs over here. You can get to almost any part of the Metroplex within 20 to 30 minutes max. And then you'll have Alliance, which is in North Fort Worth. I think that's a sleeper town that a lot of people overlook here, but they're just building more and more bigger boxes up there. And it's due to the 35 West highway that goes all the way down to Austin, even down where you guys are at. So that's become another major hub for us as well. And FedEx, Amazon, they're all up that way. And you've got little pockets up in Plano as well, which is probably about 30 minutes from the airport. And they've got some major, like Toyota is looking to move up that way. And they've got everybody else just following them over here.
So do you look at, like, for example, in multifamily, right, we look at household demographic, we look at median household income and, income growth, job growth and all that. But it looks like industrial is different, I guess. Like you have to look at how convenient for the 18-wheelers to meet and compare, and also seems to be some kind of adjacency with, certain key distributors like Amazon or Toyota, right? So is that a key factor, I presume?
Yeah, absolutely. And actually, we've got a map behind us.
Sure.
Let me tell you a couple things. Hold this real quick.
For those who are on YouTube, we can definitely see the map.
Go back.
It's very tricky to really, talk numbers in terms of.
This is the Dallas-Fort Worth Airport right here, okay? Mm-hmm. And this is the Great Southwest District that Michael was talking about.
Okay.
This is where you'll have a lot of warehousing and a lot of it up north as well. Amazon's got a large center north of it as well. And so you kind of have the same thing, which is growing a lot out here where Hillwood has their Alliance Airport. And then the same thing back over here where Dallas Love Field is. There's a lot of warehouse over there and there's a lot off Stemmons. So, a lot of these guys where we see a lot of tenant velocity and things of that nature are going to be closest to the airports because that gets, especially Dallas-Fort Worth, because here they can go to Fort Worth, they can go to Dallas, they can go south, they can go north, and they can receive from one of the largest airports in the world right here.
Got it. So it's basically access to the airport and access to the highway, and how convenient is it to go to other big cities, I guess, right? Fort Worth, Austin, and,
They don't necessarily need highway visibility because that's, your most expensive parcel of land. But they need good access to it. And so having that there by that airport, they've got access to, I-20, I-30, 183, 360. And so that's a really good hub. And that's why that district is such a large district and continues to expand.
Is there like a park, like an industrial park where the city or the government has allocated? Or is they are random everywhere in this?
No, they're more spread out.
Okay.
I do, yeah.
So there is no like tax incentive offered by any government or any cities, I guess, for the industry.
Well, certain cities will offer certain tax incentives. I know Dallas offers quite a few in certain areas. And even if you start getting into like the opportunity zone areas and things of that nature.
Got it. So we talk in terms of industrial, in terms of square footage, right? That's what you said, right? Square footage and access all amenities, but I presume, what is the average price per square feet in terms of industrial buildings?
So that is a very good question because those can actually range anywhere between 50 a foot all the way up to, building new. Also depends on age of the building, ceiling height, power in the building. So there's a lot of factors in industrial that, you have to account for. How many docks as well, dock high, grade level doors. Are you familiar with any of these terms?
No, this is all completely new.
Yeah, so
but it's important. I want you guys to share that level of details because I want people to really learn because I'm going to go to the underwriting later on. So let's go into features of the industrial? Is there like a class A, class B, class C industrial buildings?
Absolutely. Go over some of the rates that you see on some of these.
Yeah. What are the class A?
And rental rates. Are you asking for rental rates?
Rental rates and also buildings, right? I presume that's all correlated.
Let's do some rental rates.
Yeah, so rental rates, you'll see anything depending, like I said, very niche specific stuff. So like you'll see anything from $4 a foot all the way up to 10, and sometimes even higher, and triple net for some of the newer industrial product coming out. And then you have, if it's in a less desirable area, they'll teeter with the 4 to 7 modified gross or industrial gross, as you'll hear. And those usually have some expenses in there that are charged back to the tenant. As for space, if the space is less desirable, you're going to see more of that industrial gross number, anywhere between 5 to 7. Newer stuff, like I said, $10, sometimes triple net, just depending on area and access.
And a lot of times as that building size gets larger, that rental rate will a lot of times go down.
Okay. So before we go further, can you define triple net? Because a lot of people in the residential stage, they are not used to this triple net. Can you define a triple net? What does it mean?
Yeah. So if you can ever in residential, try to charge them triple net. But what I'm saying is, so triple net, basically it's taxes, insurance, and common area maintenance is charged back to your tenant.
Okay.
So sometimes you can get an absolute net, triple net deal. And that's where the tenant also takes care of the roof and structure. It's not as common in industrial unless it's a single tenant deal, but most of the time you're going to see just regular triple nets.
Okay. Well, interesting, because we don't have that in multifamily, right? That would be awesome, right?
So you need to start doing that.
So triple net also means that if the property taxes goes up, the landlord doesn't get any, we don't get any impact, I guess. We still get the rents that we're supposed to get, I guess.
That's correct. And sometimes, your tenant, if they're a little more savvy, they'll have like a protection on no higher increase than 5 to 10% on their common area maintenance or taxes. So let's say like your lawn guy wants to charge you way more, that'll force you to just find a new lawn guy at a more reasonable price.
Got it. So what is the landlord responsible then?
Roof and parking lot, structure in the building.
Okay.
If it's a triple net, yeah.
So does the landlord still get the tax benefits of owning the real estate? I'm presume so, right? Because you own the building, you own the roof, and you own the real estate, I guess, right?
Yes. So, well, it depends on the tax benefits that they're getting, but if it's, ownership of the real estate tax benefits, yes. Now, if it's business related or some of that nature, that's for them, obviously.
Correct. And I think the depreciation schedule for industrial and office, I just want to cover that, is 39.5. Is that right? If I'm not mistaken.
I believe you're correct.
Okay. Because I know in residential is 27.5.
Before I'd ask me.
Yeah. So I think residential is 27.5, and all other asset classes like 39 or 39.5. I can't remember, but that's a good distinction between triple net and the normal deals that we buy in multifamily. So coming back to my question, so I know we talked about different rental rates, but is there any classes that you guys have categorized in terms of industrial buildings, or it's just based on how old they are and there's no real definition in terms of?
Yeah, no. So they do have classes. You've got B, you've got C, you've got A class, and a lot of times that is determined by age and location, and building quality and things of that nature.
Okay, got it. But definitely have to be in somewhere accessible near to the distribution pod, I would say, or distribution hub, I guess.
That's what a lot of them like. They are very keen on location. Like I said, it doesn't have to have highway frontage, but having that access is very key.
Okay. What about who buys the industrial? I never find, I want to interview as a buyer of industrial parks and industrial buildings, and I can never find, but you guys know all these guys, but who buys, what is typical buyer characteristics, or where does he come from? What does he look for? What is his appetite in terms of investment whenever they buy this industrial building?
Absolutely. So there's a lot of buyers for industrial, and they increase every day. And even for the small bay warehouses, we have so many of those people that keep pouring into the marketplace, and not just Texas, but in the U.S. as a whole. But yeah, industrial probably gets some of the most cross product or cross asset buyers that we've got. People from self-storage buy these. People with retail, past experience, they buy these. We even have apartment owners and operators buy these. But there's a lot of REITs and institutions and things of that nature that are big in it. But no, a lot of, I would say the past 10 industrial buildings that we sold, probably, I want to say 7 of those were to out-of-state owners.
Got it. Are they from coastal city like New York and California? Are they local Texas guys?
Canada, Florida, Chicago, okay. Absolutely.
And do you see that this one guy buying across the nation, or is still very localized?
No, a lot of these people will buy across the nation, but Texas is a market that a lot of these people look into.
Oh, Texas. They like a lot of Texas?
Oh, absolutely. Yeah. And like Michael was saying, because of the Dallas-Fort Worth economy and that nature, it gets a lot of eyes.
Got it. Very interesting. Okay. So let's go back to underwriting an industrial building. I presume there's a rental of that building where the tenants, is it like usually one tenant, or is it like multiple tenants, or how does that work? Or is it all the 18-wheelers parking need to pay rent?
Yeah, it can be one tenant. We just sold a very large complex off of 360 that had about 80 tenants in it.
Oh.
And so it can be very intense with a lot of tenants. And I think the group that bought that had a lot of multifamily experience as well.
So 80 tenants in one building, I mean, do they have like counters in it, or do they have docks?
Yeah, so it was a bunch of buildings and a business park.
Okay.
And so it was about 22 of them. And so it was a business park. Yeah. So
it's like industrial park where everybody have buildings and they rent the, got it.
They had their own suites and things of that nature.
Okay. So if it's triple net, then probably there's nothing to do with expense ratio for a landlord, right? Because you get,
a lot of those I believe were on gross leases still, but with industrial, a lot of people that aren't on triple net are going that way.
Okay. Explain what's the difference between gross lease and triple net.
So a gross lease, you'll find a lot more in office and general office.
Okay.
But you will absolutely find it in industrial. A gross lease is going to be where the landlord's taking on common area maintenance, landscaping, repairs and maintenance, HVAC, things of that nature. And so it's more management intensive. Your expenses on the landlord are going to be higher. And that's a gross lease. But then you start getting into other types of leases. You got full service, you got gross, you've got modified gross, and you get into like net, double net, triple net.
Okay. And what about full service, as you mentioned? Because I've seen.
So full service, you're really only going to see that in office.
Okay.
And what I mean by that is landlord pays everything. They pay the utilities, they pay the janitorial, they pay the common area maintenance, they pay taxes, interest. They cover everything a tenant goes in as, a price per square foot, and that's all they pay.
Got it. Very interesting. So let's go to office. I mean, in general, people are worried about office, right? Because, people say the trend is working from home, right? So is that still true?
Not here.
Not probably in Dallas, I guess.
No. I think office is actually trending a lot more towards co-working and things of that nature. And that's a model that has just expanded and blown up like crazy, especially out here in Dallas-Fort Worth.
So what is a typical investor who's looking to buy office space or office buildings? I mean, where do they come from? What do they look for in an office? What kind of hold time do they have usually?
Yeah, so their hold time can range anywhere between 5 and 7 years.
Okay.
But, we just did a major value add project in Plano where Toyota's headquarters is. State Farm had moved out, and it was probably 20% occupied. That buyer actually, did a bridge loan, and he's going to go ahead and get that filled up very quickly, just because the area's occupancy is not any lower than 80-85%. But where these buyers come from, same thing as the industrial guys, because a lot of industrial buyers also look at office, and office guys look at industrial as well. But like I was telling you the other day on the phone, we've noticed a huge influx of multifamily buyers in moving into office just because the returns are a little higher. And so we had that last guy, California. We've got one in Chicago looking at one of our deals right now. We've got a couple local groups out here that know these office buildings really well too. And they know the trends of the area and how the occupancy is. So one specifically we're working on right now near White Rock Lake. in Dallas. That one's at 92, 93%. And that one's always been full ever since anybody can remember. So that's where these buyers come from. Any other questions?
Yeah. How do you decide this office space is in a good location? Other than knowing, I know Plano is hot and I know Frisco is hot, but what are the parameters you look for in terms of like jobs growth in that particular submarket, or household demographics, right? So
Yeah. So you look for competition within an area for that office building.
okay.
You look at comparables in that market to the building. Because if you know the market really well and you know every building, you'll see that, some gives you like a better bang for your buck. Some will have a lot of amenities that they're starting to offer. Some groups are starting to do incubator spaces where they have a smaller co-working model, and then their tenants will grow into spaces that are available in their building if they have room. And so they'll convert, a small executive office, and they can charge anywhere, $35 to $45 per square foot just for a room. And as that tenant grows, they can grow within the building. But if you want to look at like specific markets, like Las Colinas, Irving area, are you familiar with that area?
Yeah, I've heard of that.
Yeah, so that area has a lot of office, and that's one thing you need to make sure of when you're looking at a deal. How many other Class B or Class A properties can your tenants look at before they commit to a space? But if you're looking over in Dallas, like where White Rock is, right? Our building is the only building for the next 2 or 3 miles before you hit a highway, either going towards 75 or going north towards 635. And so that's why this building's been able to capture a lot of the people who don't want to drive all the way to 75 and fight that traffic every day, or drive north on 635 and fight with that traffic as well.
So you probably look at cost, VPD, right? Vehicle per day drive on that nearby highway, I guess, right? And I think, as you mentioned, you look at other office supply in that area, and I presume you look at vacancy rate as well, right? On all this nearby office. What tool do you use? Is it CoStar that you guys is primary for this industrial and office?
Yeah, you can use. So there's a lot of tools you can use, CoStar and Crexy and things of that nature. There's a lot of Real Capital Analytics as well. They track a lot of good stuff. What I would also say on the office side is it's probably one of the product types that's a little closer to multifamily.
Mm-hmm.
As far as kind of how to make them successful and things of that nature, because when people go look at a multifamily complex, they usually have a couple options, right?
Mm-hmm.
And so a lot of times what they'll look at is amenities, access, recent renovations, things of that nature. What can they do for me on a new move in? And so office is very much a model that is driven just like multifamily. And so keeping up with the times, making sure the renovations are good, making sure the building, offers, things like, some of them, a deli or, Wi-Fi and stuff of that nature, or co-working style environment. Those things all help office buildings succeed.
Got it. And what about this, vacancy rate? Because sometimes, multifamily is people need a place to live, and vacancies are pretty low, I guess, comparatively to office. So, different tenant profile, right? So, what is the average vacancy rate? How do I know like this area, this is the vacancy rate? And because sometimes it can be like 6 months, 1 year, sometimes it can be a few months, right? Depends on the area, I guess. Like, how do you determine what is the vacancy rate for office, and what are the lease terms in office usually?
Absolutely. So, the vacancy rate is going to be area driven.
Okay.
Right? And so, you'll have certain areas like, downtown Fort Worth, which will have a certain vacancy rate. And then that is going to be very much different than, Las Colinas, downtown Dallas, Plano, Allen, McKinney, Frisco. We pulled something earlier today, working on a few things out in the Allen and McKinney area up there by Frisco. And, their Class B office space is, around, 5% on the vacancy side, which is very good for office, especially with more and more supply continuing to come up out there. In Las Colinas, it's gonna move a little bit more. And so, in my career, I've seen Las Colinas go, down to almost 30% and, come up to, somewhere around 10, but there's a lot of supply out there and there's always things shifting. Fort Worth, I believe their occupancy is higher than what's being shown, but that's because XTO owned a bunch of the office product out there at one time, and they recently sold a lot of that off. So some of that's being converted to hotels and things of that nature. But what you want to look at when you're buying an office building is, yes, the area vacancy, the area rental rates, but also the velocity of tenants. How many tenants are moving in that area? And then you also want to look at what are the size of tenants, the square footage sizes that we have, and what is really the area tenant size. And so, some people will buy a building and, they'll have, 10,000, 15,000 square foot units when the area is really commanding, 3,000 to 5,000 square foot tenants. And so they'll see a lot longer on market time. And so what they need to do is chop those spaces down.
And do people who buy, I just want to add industrial and office, are they people who syndicate deals like what a lot of multifamily people do? Or is it REITs, or is it some institutional or some rich guy, from the coastal areas?
It can be a rich guy like yourself, or it can be a syndicate.
I'm in Austin, Texas.
It varies. When you start dealing under $5 million, a lot of that's going to be private.
Okay, but is it a lot of syndication happening, or is it still?
Yeah.
Oh, really? Okay, so syndication is not a multifamily game only; it's also in the office and industrial. Okay, that's really good to know because I didn't know that.
Yeah, and to go back on your question, you're asking about lease term.
Mm-hmm. Lease terms.
Yes. So you want to make sure that area driven, right? Like who you're saying, but you also want to make sure that your TIs are not going to eat you alive.
Yeah. So TI is the tenant improvements, just for the audience, for them to know. Yeah.
Yes. So, and you'll see a lot of these guys in office that are moving. Sometimes they really want like a gold-plated wall finish out, and you just can't do that for them. You need to make sure you get that lease term where it can get your TIs not in the red for the first year. You want to try to keep that around, like $10 or so per square foot. But you'll see those terms go just depending on what they need done to the space, how many offices they need built out. You'll see that range anywhere between 3 years, 5 years, 7 or 10, sometimes 15 if it's a really big one. That's usually the range you'll see on lease term.
Got it. So I think it's all up to negotiation and how much the landlord's going to pay and how strong is the lease terms and all that, right? Yeah. How do you qualify your tenants? I mean, let's say I'm a buyer, I'm buying an office space with 10 different tenants in it, right? How do I say this is a class A tenant, this is a class B tenant, class C tenant? How do I say that?
So when we underwrite a lot of these deals, we're looking at the tenants, how long they've been there. Mm-hmm. We can also reach out to the seller or ourselves if we know the tenant, what their credit rating is, and you can give a write-up on them. Like we were selling a 3-tenant deal out in Las Colinas, and some of the tenants themselves put in their own money. They put in $500,000 in improvements to make the space work for them. So that was one of the things that we made sure that we had in our OM when we were underwriting that deal, and how much time they had left. Because when you're looking at these, you're like, oh man, this guy, he's only got a year or two left. But a year or two ago, they put $500,000 into the space. So sometimes those are really big, key factors when you're explaining these commitment levels of the tenant to a buyer.
So you said credit rating. Is there a data that you pull out from them, or you just look at history and how they have lived and all that?
Yeah, all those things combined.
But is that something that where you can pull from the credit rating of the tenants? Is there a system, or you just have to look at checklist items?
Yeah, not always, but when you're working a lease deal, when I used to lease back in the day, we would get tenant financials from them.
Okay.
Sometimes, yeah.
So based on their financials and what's their commitment to the space, that's where you establish their credit rating, I guess.
Yes, and comfort level with the tenant. Like, I feel like their financials are good enough for me to spend. So
it's very subjective then, because somebody who want to sell the deal, he may say all my tenants are A+ credit rating, I guess, right? So I'm just trying to quantify that a bit more, but I think it looks like there's no real
The
No
times
real
you would have
definite.
like so the times you would have like an A plus credit rating or something of that nature is when you've got like, a DaVita or something of that nature in the building, or a FedEx or something
Okay.
like that. But a lot of times office buildings will have, a little bit more generic companies, local regional firms. And so that's why Michael said, if they're going to spend a lot of money on the finish out, they'll say, hey, we'd like to see your, business financials, just so we can make sure the money we're spending, that you look like you're, somebody's going to be in business for the term. And, they're pretty much used to that.
Got it. So let's say a building is being sold right now, right? And some of the residents have like 1 or 2 years lease term left in their leases. If they get to know that somebody's going to buy this building, will they start negotiating with the new buyer, or the new buyer have an option to know whether they're going to be renewing? How does that work? Now that basically increases your risk.
Yeah, so typically they do not know until you're pretty far along in the process.
Okay.
So they'll usually get a tenant estoppel, which will signal to them that, hey, the building may change hands to a new owner. But although they're getting that, it's mainly just a lease verification to make sure their security deposit is transferred over as well. You don't want to alert the tenants, but you also want to make sure that when you're working on these, that they're paying what they're saying on the OM, and it's matching what it has on the estoppel as well.
Got it. Well, Michael and Cody, thanks for coming. I mean, can you tell our audience and listeners how to get hold of you? You guys are doing really big deals in the DFW area. I'm not sure. Are you guys covering any other areas other than DFW?
I'd say 95% of the business that we've got is in DFW. Now, we will branch out and sell a couple things here and there. We're actually about to bring out a 20-story office tower out in Corpus Christi. But that's a relationship that we have.
Let me know if some of the towers in Austin is coming for sale. I'm planning to buy one.
Absolutely. Yeah.
I just heard there's 37 new towers coming in Austin. So,
there's a lot of people that are looking out there. I can tell you that.
Yeah. So why not you guys tell our audience how to get hold of you guys?
I'll do it. So, Cody Payne, Michael Tran. Our number is 817-840-0055, 817-840-0055. We're with Colliers International. We're office and industrial specialists, and we've got some really good self-storage and retail guys here as well.
Good. Guys, I mean, look for specialists, because all this asset class, there's a lot of nuances to it. There's so much of details. Not everybody can do this. And, these guys are some of the best in the industry. Thanks for coming on.
Right here, baby. See ya.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.